Hello, Chad Payne, investment advisor with Security First Asset Management, here for our weekly market recap for the week ending September 16th, 2022. First, before I get into the market recap, I want to give you a couple of announcements. We still have our third quarter drawing going on for the StubHub gift card for $100. All you got to do is give us a referral of a friend or family member, someone we could share our story with, and you'll be entered to win that gift card. That we'll make that drawing at the beginning of the fourth quarter. Also, next week, the 29th of September, in our Macon office, we're going to have a tailgate cook-off, and we'll have a great time of fellowship there. 5:45 in the afternoon in our Macon office outside. And if you have any questions, give us a call or check out the website and get your name in there. Mark your spot for that on the 29th. So look back at last week. We had some pretty tough economic data that came through. First of all, the S&P 500 had its largest weekly drop since mid-June of 2022, dropped over 4.3% just on Tuesday alone. So a lot of that was based on inflation data. There was a lot of hopes that inflation was going to show a significant slowdown during the month of August, but that proved not to be. It was just a tiny slowdown and a little higher than expected year over year. Also, the Fed came out with some pretty strong words that, due to inflation, we're going to continue to be really aggressive on our rate hikes. So that didn't give the market any positive reinforcement there. Also, some of those inflation numbers, when you kind of dig down in them, gasoline did go down pretty significantly over the last month, but the inflation numbers overall were still high. Electricity was up significantly during the month of August, and that made inflation stick around more. So there was some good news about unemployment claims. They fell for the fifth consecutive week, and so still gives the labor market some pretty strong backing there, even though the inflationary pressures are there. And mortgage rates too, we're starting to see a lot of slowing in the housing sector due to mortgage rates. They reached up over 6%, which is almost double from last year. This time they haven't been that high since 2008. So looking forward, all eyes are on the Fed. We've got a meeting this week that we'll see what the rates maybe raised to. A lot of expectations for 75 basis points to follow up the previous 75 that they've had. Even a few people calling for a 1% rate hike. So they're trying to get a handle on inflation, which again is slowing the economy, which may or may not be causing a recession. So we'll have to stay tuned to see how things go there. On a positive note, we do have some fixed rates. Again, we've talked about them several times. They're much higher than they've been in quite some time with all these Fed rate hikes. Some guaranteed fixed rates do look pretty attractive right now. So give us a call if you have any questions about that. Hope to see you soon. Hope to see you at our tailgate cook-off next week. Have a great week. Thanks.